Okay, traders, the first thing we got to cover is something I discussed in the morning and, sort of persisted throughout the day, and that was just the yen weakness. So I hope one thing for those of you that join me throughout the day, especially in the morning, the one thing that we dealt with throughout the day was this persistent yen weakness. And sure, the yen at at certain points of the day was down 2.5%, and then it was down 1.5%. It never really got weaker, but it's remained the number one weakness story on our FinViz website. So this performance, this one-day relative performance, I put images out in the chat room and sometimes even as alerts throughout the day. This is also what I'll use to build the Forex trading watch list for day trading as well. And the thing to remember is that when the yen is weak, it is really tough. Even though the yen had a few moments of less weakness, it is really tough to not be long equities, and that includes equities indices. So the first thing that we did was we focused on the NQ. Let me head on over there. We focused on the NQ to the long side, and it was just simply a fade of support that occurred during the clearing range. What that means is during the first 30 minutes of the day, we looked specifically for support that we could buy into. Now, one thing I want to mention, and I still have them on my charts, and that is the hourly price movement range study. Frankly, it would probably be better if I just remove it from the charts right now, but I really want to remind everybody that when we get a sudden increase in volatility, as we have right now in the equities and equity indices, the HPMRs are historically calculated, 6-month look back. That's their strength. That's the consistency that we trust in terms of projecting relevant support and resistance. But when we get an increase in volatility like this, not a gradual increase, but a sudden increase, a violent increase, HPMRs are not going to be as accurate. And you're going to notice they're not wrong, right? It's not like they're flat out totally wrong. But what happens is, do you see this? They extend past them. They extend past them. They extend past them, right? Yeah, the markets are sort of exhausting in that area, but they keep going a little bit past them. So it makes them less accurate because they cannot account for the greater than normal price movement ranges that are happening right now. I'm hoping that by next week, I'm going to run the HPMRs fresh next week. And I'm really hoping by next week, when we have an entire week of this more exaggerated volatility, that this will be more accurate than it looks right now. That's really what I'm looking for. So right now, let's rely on the V-score, VWAP, and the V-profile, as well as time and support and resistance levels, and the yen. So we did have a short that triggered, and I did alert that out, and you'll see that around 1:30, so right in here, we had this test of the V-score and a nice test of the VWAP cluster, so right in here and right in here. So what is the VWAP cluster? The VWAP cluster is one of the very, very few premium tools that I have, gang. It was part of the class that we called the Sub-Market Sonar class, one of my all-time favorite classes to do, and it was included with the class, these indicators, which was the anchored VWAP, the anchored V-score, and the anchored V-profile. So all these tools were anchored. And so we can specify when they should start calculating that relationship between volume and price. And that's one thing that volatility can't outsmart, can't outmaneuver, because we're measuring participation, size of the participation, which really reveals conviction by looking at price, but through a lens of how many people, how many contracts were traded at certain levels. And that's how we've been decoding the market since the volatility, just sort of sprang up at us. All right. So by the way, these three tools are included in one package. You can also look at the VWAP Max tool. It's a trio. And then, or you can look at the Sub-Market Sonar class. And they are the only premium tools that I actually have. Everything else, including the HPMRs, the propulsion dots, the grab, the wave, the Darvis, everything else, gang, I make available for free. And I really do want to accentuate the fact that I really do want to make most of these tools available for free. But the V-Score is something that I originally started using almost, gosh, I have to look back how long it's been, but it's probably a good 15 years ago plus that it was something where I got very curious, and we should really be more curious. And I really encourage a lot of you to think about creating indicators or thinking about indicator creation, because it makes you look at the markets in a very different way, almost like a mechanic, right? Anyway, so when we had that, we did a quick short, but as I mentioned in the alert, we wanted to do it with smaller size because we were fighting the trend, the weakness of the yen. That was so important. And then going into the close, we had some nice pullback into the wave right in here. And this made a whole lot more sense. And any of these pullbacks made a whole lot more sense because finally we were getting another opportunity to look long with the yen strength. Now, under normal circumstances, we might have looked at something like this along the HPMR, and I'm hoping in coming weeks we can go back to using this awesome tool of mine that I created using the auto chartist data and a specific arithmetic formula that I use to project these highs and lows. I would love to get back to this, but I got to tell you, I'm sort of like, it's my baby. I look at this like sort of my creation, my baby, and you got to know sometimes the limitations of even these tools that you love. So I would be remiss if I didn't mention this is not a good environment for this particular tool, but hopefully for not much longer. Hopefully we can get back to using it. All right, so moving on from our day trades here, and I do want to mention that, and I will again today, when I take a look at the updated FinViz one-day relative performance, I will once again send out another 4 symbols, another 4 pairs, I should say, that we could look at for 5 or 15-minute day trades as we look to follow the trend, very likely of long US dollar versus Japanese yen, long Canadian dollar versus Japanese yen, and then also long US dollar versus pound, and long Canadian dollar versus pound. So I'll put the pairs together as you will see in the alert so that the proper order in terms of currency, and I'll let you know if it's long or short. So the next thing that you have to do is just keep an eye on the 5-minute time frame and look for an opportunity, for example, for a pullback buy on the dollar yen 5 or 15. So you'll look for a pullback buy for that when the market comes down to the 21 exponential or the prop dot or the wave. And then what I like to do additionally, if and when it's applicable, and a lot of the currencies have been just as volatile as the stock market and the stock indices, but if I can get the expected price movement range to sync up with the trade, if I can get that expected price movement range to sync up with it, so the EPMRs are what I'm looking at. So typically the 15, 30, or 60 minute, if I can get that EPMR level to sync up with the 21 or with the wave, so in this case I've got, and again, the ranges have been so wild, it's a 4-hour projected low that gets me to 105.30. So I wouldn't mind a pullback of 30 pips, which is not that much, to a 105.30 for a potential buy. That's how we like to day trade the currencies. And by the way, when the dollar is part of the relative performance contrast scan that we do, then yes, that opens up possibility to trade yen futures, right? So that's the dollar yen relationship, or it's actually the yen dollar relationship because of the way the futures are quoted with the second dollar always the second currency. So we would be long the Forex dollar yen, but we would look for shorts in the yen futures. Okay. All right. Because you'll see the directional sort of connection as soon as you pull up either chart. All right. Last thing here is the natural gas trade. So I did send out the natty gas. It can be a today setup or even tomorrow. A lot of you also know that I've been sending out more tips and sort of more general direction of the market type alerts for everyone to kind of follow. So I know that those of you that can't be in the room can still keep sort of up to date with the conversations that I'm having in the chat room, and check out the alerts. Make sure you have the Simpler Trading mobile app. That'll keep you up to date. But I'm looking today and tomorrow for shorts. In other words, well, really not shorts in natty gas, but that's the position we want to mimic. We want to buy puts in UNG or puts in the NG futures. Today presented the first opportunity. I think we'll get a second opportunity, very likely, although who knows, but very likely with an inside ranging day and a kind of narrow, low volatility day as compared to today. And we'll be able to maybe get a second day of opportunity. But it's probably, my hunch is it might look a lot like what we had last time that we built our UNG long put position. Okay? So that was the other setup. Now, for those of you that are wondering, Rog, we're day trading the broader averages, but when are we going to short them again? Now, I sent a very clear alert to when we decided to shift our direction, not to back and forth distribution, but to specifically shorting the rallies, or as they say, shorting the rips. And that happened when the Federal Reserve flinched, panicked, and they cut by 50 basis points. Now remember, we're looking for another 50 to 75 basis points by or on March the 18th. So if we get another rally on that, that could be a really good opportunity. And I think the market could. So you're wondering, Rod, by March the 18th, could we rally again? Yeah, I think we could rally again. I know it's only March the 10th, and that might mean 8 days before we get that opportunity. Maybe between now and then, we'll continue to day trade. Maybe we'll get another opportunity around 3,000 on the ES or other levels on the NQ, YM, RTY. But I think we might get another opportunity when the Federal Reserve flinches again, panics, and they start to cut. Now, a few other things that could be bullish catalysts, so don't be too aggressive down here at these depths in terms of daily time frame shorts or puts. We have the bank at 3 p.m. tomorrow. The head poobahs of all the banks are going to the White House. We are very likely going to see some bailout plans for the travel industry and for oil, for shale. Okay, the market's going to like that as well. Maybe we see some sort of meeting of the minds regarding the stimulus package, and also something about a payroll tax cut extending into the election. I mean, there's a lot of conversation, but we're nowhere near that stimulus package being ready for showtime, which is, again, partly why we rolled over for a bit earlier this morning and started looking weak rather than the strength that the yen was screaming about all along. So there are some things that could have us rip even higher than this. We might see a little bit more strength. So I'll start talking about levels at which we could start buying ES puts or SPY puts again, YM, DIA, NQ, QQQ, RTY, IWM. So we still have those to come, and we'll definitely use the V-score to identify those. And that V-score right now, gang, is one of our best friends, because these tools like VWAP, V-score, V-profile, they are not going to be bamboozled by the higher volatility, because they're measuring volume. They're measuring participation, not volatility. All right, so that's it for today's update. I'll see you tomorrow morning in the chat room for the open. Maybe we can pull off a couple other winners again, and I'll see you in the next update.